right, so let's go ahead and kick it off since it's 10 o'clock. Good morning, everyone that's joined us, and to those that will be joining us. We are excited to welcome Jay Kimelman here from the Digital CPA to join our call this week. We got him for the first 30 minutes, and then we'll go into our normal Q&A after. I met Jay originally through a networking group, which is something I met his wife through a networking group, which is something I strongly recommend you get involved with, whether it be like we were with the MBA and the Red Group, but there are BNI groups and other chamber groups that you can get involved with, and you get to meet great professionals. One of them was Wendy, and then who introduced me to her husband here, Jay. And actually it was in the very beginning, I was still an agent, and Jay helped me get my business set up from going from just being Kevin Johnson to being Kevin Johnson LLC. And getting all the paperwork filled out and handling the taxes, getting me set up on a cloud-based accounting platform so that I could record all my receipts and expenses in there. And that way he could see it, consult with me once a month, could email questions. So that way at the end of the year, filing my tax return was a breeze. And I had to say that I've paid far less taxes than I ever dreamed I would, all legally. That's what I love about Jay, is there is no there's no gray. It's either black or white. It's legal or it's not legal, but he will make sure that you are aware of all the opportunities you have to make sure that you're paying as little to Uncle Sam as possible. Because let's face it, none of us enjoy giving Uncle Sam extra cash. I never met someone that does. So Jay, tell us a little bit about your background. How did you get to the point in your career where you are the owner and CEO and head dude in charge of the Digital CPA?
But thank you for having me on, Kevin. This is great. I've loved working with you for years, and I've been a zero accountant for almost, it's going on 6 years now, and I actually dragged Kevin along to a couple of zero events, and we've spoke on a few of those, and it's been fun. But started the Digital CPA after divorcing from another company with a partner back in 2011. And basically I've done taxes since the early to mid 90s when I got my CPA. I was a CFO, CIO of a Orlando-based pharmaceutical company. Left there, started my own manufacturing company, which is thus the divorce, and built out all the systems there, from using QuickBooks on the desktop and it crashing all the time to moving up to a global-based ERP system, which now what we do at the cloud, instead of spending 140 grand on hardware and software and consulting, I can do for maybe 10,000 for a setup fee and less than 500 a month. So, if you know any manufacturing companies that need some help, we do that as well, because that's where a lot of my expertise is in. But I love working with realtors, and that's where we are today. And because I can actually help you on the ground immediately. And as we go through today, and if you want to book a meeting with me, be glad to talk and tell you how we can help you and save money. And like Kevin said, nobody wants to pay the government more money. And the basis for that is, number one, how you set up your company. Number two, how you operate your company. And number three, knowing your numbers, and knowing your numbers all the time. So that's kind of a little bit of how we got here. And like Kevin said, we met through my wife, who was a member of the Red Group at the MBA at the time. About 4 years ago, the Digital CPA was a very local-centric firm. Today, we have less than 10% of our clients here in Central Florida. Although we are here, we operate globally based on the power of the cloud, and allows us to pretty much work from our iPhone right here. So we could also help you do the same.
Yeah, that's what I love about me. It's been interesting to watch you grow. We've kind of grown together.
For sure.
It's been really fun to watch and get to know your team, who's basically now your family, right? And
yep.
And grow together and go to San Francisco to ZeroCon and here in Orlando. So for an agent getting the business, why should it matter? Why do I need a CPA? What's the difference between, just doing business and my broker cutting me a check to my personal name versus allowing or doing what the state allows me to do and form an LLC in my name?
Well, there are certain different things there. So uh, as an individual licensed broker, I can go out and set up an LLC, and I am taxed exactly the same as I would be as if I went out there and got a 1099 to my name. The trick there is knowing your exact situation and applying that to the tax law and seeing if it's better to operate as an S corp. At that point, at an S corp, you're not going to pay self-employment tax, but there are other requirements that you have to have, like having a payroll and making sure you get a reasonable salary. And at that point, and I haven't run the numbers yet because we don't have the tax software for the new tax code that was enacted that's going into effect for 2018 for this filing year. But previously, if you made $100,000 as an S corp and you paid yourself half of that, $50,000 in salary, you could save $6,000 in taxes. Now, there's a lot to it because you have to make sure you file the right forms, do the right payroll, and make sure you're filing all the payroll forms and taxes as well. The other side of that is making sure you're withholding taxes on yourself so that you're not being caught up and being behind and getting penalties for underpaying.
Right. So what are some of the, besides what you talk about, the 6,000, that just from obviously from the payroll tax savings with the,
Right.
the self-employment tax, but talk a little bit about the differences, like as a person versus being an LLC, where I can have the expenses hitting the LLC before they're passed on to me.
Right. So basically, when you set up an LLC, you're creating a legal entity and you're separating it from yourself. So at that point, you want to make sure that everything you do, you're running two separate lives. You have the business life and the personal life. And you're going to go out in your car, you're going to drive around and show homes, go out and book contracts for sales. You want to make sure either you're in a company-owned vehicle and you're tracking mileage for that, or you're in your own vehicle and you're tracking mileage, because you always have to, because you have to get the business percentage of the mileage if the company owns the vehicle as well. So you want to make sure you're doing that. And by doing so, you have the vehicle in the company, you also have the insurance in the company, and basically you're separating that. So the traffic here in Orlando is crazy, and you have a car wreck in the business car. So yes, you are driving the car, you will probably be personally liable, but the bigger pockets is the business, and basically they'll go after the business first. So you have a separate legal entity for liability to protect yourselves. That's where you have an entity. And that is the biggest reason to have an entity, other than saving on tax and having an LLC taxed as an S corp.
Right. And I don't know obviously everybody's still like going through the volumes of tax code that was passed just recently, but wasn't there something in there where if you are an LLC and you're a real estate agent, you're able to take a kind of off the top deduction?
Yes. So as a realtor, you are considered a specialized service business because you are the business. So there is a cap on $157,000 on the income there. And you will be limited to the deduction. It's called the qualified business income deduction, and it's 20% of your income that is immediately deducted. So it was the government's way of equalizing that 20% tax rate for C corps being reduced from 35 to 20. So by giving individuals and pass-through entities, which an S corp and an LLC is, they're called pass-through entities, giving them the qualified business income, or QBI. I was just going to spit out the initials, and I don't want to just give you all alphabet soup because that you'll get lost really quick. So that QBI, or qualified business income deduction, is 20%. And that is just a 20% deduction off your profit that is a direct reduction in your income.
So I don't get that as an individual though, right?
You do. As a Schedule C filer, you get it as well, because just like the others, you're considered a pass-through because it's passing through to you directly.
So if I'm saying if I operate just as an agent, individual, my broker's paying me personally, so I don't have the LLC. You're
still going to get the QBI 20%.
Nice. Did not know that.
But that does not apply to the self-employment tax.
So you're still getting better savings.
Yes. And that is a situation by situation determination, whether you want to be an S Corp. And I would just, say, if you are going through that, book a consult with me and we can talk through the issues there. And
so at a minimum, do you recommend that every real estate agent have an LLC, and then it's just a determination based on circumstances whether you take that LLC and file as an S Corp or not?
Yeah, exactly. So the determining factors there is your income. You have to have payroll, so there's an additional cost there. You have to file an additional tax return, so there's additional cost there. Whereas if you're a single member LLC, or you're just operating as your individual self, you just put that on a Schedule C on your own personal return. You're going to pay a little bit more for the additional business return Schedule C, but you're not going to spend as much as you would on a full-blown S Corp return. So there are additional compliance costs that go along with saving that $6,000.
But do the compliance costs outweigh the savings?
It probably wouldn't. You'd probably still save $4,500 to $5,000 a year.
Nice. What about?
But there are different income levels. You got to look at that, because if your profit's only 75, you're not going to realize that same balance. So that's why we want to look at it on a situation by situation basis.
Right. What about as an individual? Obviously, when a lot of our agents are transitioning from other careers where they got a paycheck from a company, that company, every time they got that check, took out payroll taxes, right? Yep. So they didn't have to worry about it. End of the year, they get their W-2, file their taxes, are on the way. As an individual, what things change? Like, so they've had a great year so far. We've paid them, $100K in commissions. Are there any different requirements as far as the quarterly filings where you have to start paying your taxes quarterly if you're not being withheld through payroll?
Yeah. So what the IRS expects is you to pretty much prepay your taxes each year. And the rule there is you have to pay up to 100% in advance before April 15th, basically, of your prior year's tax, or 90% of your current year's tax, whichever is lower. So what we do is each year we send out 1040 ES forms to our clients that basically equal 100% of the current year's tax when we're filing it, and ask them to remit that. Now, do you have to? No, you don't. You can just pay your tax on April 15th. But the problem there is, number one, you might not have the cash in the bank. Number two, it might not be readily available. And number three is they will hit you with a penalty because they expect it paid throughout the year: April, June, October, and January. So they do want it quarterly. And the nice thing about being an S Corp is you set yourself up on payroll, and then you start doing that, and then you can control it through your biweekly or semi-monthly, your monthly paychecks that you're setting up. And what I do is, throughout the year with our clients, we meet with them and we say, okay, this is what you're making, your profits looking like this. We probably want to increase your withholdings on your payroll and go ahead and do that. Or we get an exact amount and say, okay, let's increase and add an additional $500 per paycheck for federal withholding. So it's really important to do that in advance.
So make sure I'm clear, especially for, those that don't have as much experience around it. So we're in 2018 right now. Let's just say I have not worked at a job with a paycheck like normal, and I'm only getting my real estate commissions.
Yep.
Should I have been paying quarterly taxes to the IRS this year?
Yes, you should
And
be.
if I didn't, so let's say we get to the end of the year and I haven't been working with a CPA and we haven't been making those quarterly tax payments, come 2019, April 15th, I'm going to potentially see a penalty from the IRS because I didn't pay in all this year.
Correct.
Wow. So that's something I didn't even realize. So I'm learning little things here today because we have the payroll. So
Right, exactly.
I've never fallen into that.
The other thing to understand there is April 15th is the due date of a tax return. It's also the due date when taxes are due. You can extend the filing of the tax return, which yesterday was the extension deadline on October 15th. It does not extend the due date of the payment. So if you're estimating you're going to owe $30,000, they expect you to pay $30,000 on April 15th. Now, let's say you don't, there are additional penalties and interest that will apply for that following 6 months.
So April 15th of 2018, they expect to be paid for all of 2018 in advance.
They expect to be paid. No, that is the
Sorry.
So I'm filing. Let's jump back to April 2018. We are filing for 2017.
Right.
2017 taxes are due on April 15th, 2018. We extend it, and then we end up filing on October 1st and paying all of your tax due on October 1st. You are going to pay penalty and interest from April through October 1st on that.
Right. So I guess, so let me re-ask my questions to make sure everybody's clear. So we do have some agents that are not working jobs anymore. They are full-time agents. So we're obviously, they're 1099. So we're just cutting them the gross check. It's up to them to file that. We'll give them the 1099 at the end of the year. So should they be paying quarterly to the IRS in 18? And if they don't,
yes.
And if they're not, when it comes to April of 19, they file that tax return, there could be a penalty from the IRS on that tax return.
Yep. Exactly.
Okay. All right. What do those penalties look like? Is it a percentage or is it a flat
It's
fee?
a percentage. I think it's a 0.5% per month or something like that.
Wow. So that could add up depending on
it can add up. Yes. I mean, if you're a good earner, it will add up. If, it could be a couple $100, and, if you're getting started and you're getting a couple commission checks and you're living off it, it might just be a couple $100. And, by the time you get to April, you're really rolling. At that point, you don't care. You just pay it then. And then my advice is, let's start estimating payments now, or based on your income, let's get you in an S Corp. And that is something like we could actually go retro and put you into an S Corp, even though you haven't operated as it since you started. So let's say you start your LLC on March 31st and you start your business then. So you go from March 31st all the way to December, and we get your financials and we see you made $115,000. At that point, instead of paying 15% self-employment tax on that, we can go back and elect for you to be an S Corp. And basically, there's a possibility we got to go back and create payroll for the year and do that so you have the proper requirements for an S Corp. And at that point, save you, let's see, it's over $15,000 at that point, because 15% of 115 is
it adds up. Yeah.
$1,000. So at that point, it's worth doing that and saving yourself some money. So
absolutely. So if I'm a brand new agent getting started, what are some of the first steps a new agent should take getting into the real estate business to set themselves up for success from a tax and accounting perspective?
First thing, if you're going to set up an entity, do that. And if you do, you get your EIN number, and very next thing you do is go to the bank and create a separate bank account for your business. And that is exactly what you have is a business. It's not Jay or Kevin out there selling real estate. It's Jay LLC, which is a business, and I have to operate as such. And it's really important that you do to keep things separate. So separate business bank account. If you're going to get a credit card, have a separate bank account for those expenses. Now, the other thing is track your mileage. Get a tool like MileIQ. And I will actually hopefully get a list of the attendees. I will send out links to some discounts on some software that I can get you access to, and offer you all a free consultation with me as well. So we can go through your specific situation and I can try to help you out. But track that mileage. But when you're buying your gas for your vehicle, unless the vehicle is a company car, pay for it with your personal funds because you're going to claim the mileage. And most of the time, even I'm assuming if you're doing this full time, you're driving around a lot and you're probably booking 3,000 to 5,000 miles a month. So if you think about that at 54, 55 cents a mile, it adds up, and that exceeds what a car payment is.
That'd be 3,000 miles. That would be $1,600 in allowance from the IRS.
Right. So if you think about that, you're paying for a vehicle. Let's say you're leasing a car for $400 a month. You're still only using it 75% of the time, and the other expenses that you have are not going to exceed that mileage. So, if you're a realtor, you're out there driving, get your MileIQ, make sure you're tracking your mileage, and do that because that is one of your biggest deductions. And more people are working from home and traveling to an office, or they're working at a co-working space or officing from home. Depending on how you're set up, those situations can be trackable in business miles as well. And then, every trip that you're making out, meeting clients, that's like one of those biggest things you're going to have. So
see, everyone, you can make money by coming to the office to hang out with us. There you go. That's the moral of the story. Come visit us and hang out with us.
And then the other side there is if you do have an LLC and you're not an S Corp, it's really easy to take the home office deduction, and there's a safe harbor, which you don't have to pay back any depreciation if you take the normal office and home deduction if you sell your house. So there are a lot of different situations there that we can actually help you with. So look forward to doing that with y'all.
Yeah, one thing I will say is there's so much, right? And we, as real estate professionals, our job is to make sure that we can navigate our customer, whether it's a buyer or seller, from listing or the contract all the way through closing, avoiding dangers. And the good news is that while we're there being the Sherpas for our customers, we have folks like Jay that are out there to make sure from a business perspective and from a tax perspective that they're going to help guide us from year to year to make sure that we're doing things properly, we're doing things legally, and we're maximizing our tax benefit. Joellen asked, at this point in the year, is it too late for us to sit down with a CPA or not? I would say no.
No. You know when it's too late? Once we hit that holiday season and we shut down, that's when it's too late. Right now, you can still affect change to your business, and I would highly recommend booking a meeting right now.
Yeah, one thing I will say, and just as a plug to Jay, obviously, Jay is the CPA for our brokerage, so he's who we use. So I definitely endorse him and recommend him that, whatever a CPA is going to charge you, I promise you, you're going to save that and more in your tax liability. So you just keep that in mind. If they're charging you, not to say that Jay's going to, but if it's $500, then I promise you, you're saving a lot more than $500, and not hiring a CPA, whether that be Jay or someone else, will cost you. Make sure you hire a good one though. Don't hire just any Yahoo, don't hire that CPA that meets you at McDonald's. That's kind of weird. So at least Starbucks, guys.
At least Starbucks, yes. So yeah, and just wrapping up, I work from home, and I used to do those, commutes to clients. Actually, wasted a lot of time going to clients' offices and sitting there waiting. And I find I can actually do so much more by doing meetings with Zoom like this, and taking a full 30 minutes and using that time to really hone down on what your goals are, what you're trying to do, save you some money and get you either more time so you're not doing any accounting or bookkeeping and you're out saving money and actually making more money because you're able to spend more time doing it. And, you know, it's 30 minutes and our plans, usually it's a meeting 30 minutes a month, and we book them in, and we could be anywhere from 5 minutes to 29 minutes, 59 seconds. And we'll find it's so worthwhile just to do that, touching base, find out what's important to you this month, what has happened, and then we can help guide you through that through the next year.
Right. Well, Jay, I know you're with us. We have a hard stop at 10:30, so I just did a last call for any final questions. So if you haven't chatted, make sure you hit that question now. We got them for less than 4 minutes and counting, but we have that clock ticking down over here for me. You can't see it. I'm watching it. Don't worry. But Jay, in the meantime, thank you so much for joining us.
Glad to do it. And I'm currently working on a free video that I am calling Real Estate Sellers Business Basics. So it's going to break down a lot of what we talked about today and give you some of the basics that need to be done. So I will be having that launching in about the next week. Then the other side of that is I'm also doing a live webinar series called Real Estate Sellers Business Bootcamp, where we'll actually take you through it and help you set everything up, even teach you how to do the right bookkeeping and set up your accounting systems for you, with you during those sessions. So all that's coming, and we'll keep you all posted on that.
All right, very cool. Well, thank you so much, everyone, for joining us. Thank you, Jay, for being a part of it, and thank you for guiding our brokerage from our birth as an agent to all the way to where we're at today, the Century 21. We would not be here today without the digital CPA. I mean that from the bottom of my heart. So thank you to you and Wendy and the entire team there at the office.
Thank you, and we appreciate y'all, and look forward to talking to you soon.
All right, thanks so much. Bye. Have a great day, everyone.
Bye, everybody.